The recent debut of XRP exchange-traded funds has injected new optimism into the Ripple market. Within weeks of launch in mid-November, multiple spot XRP ETFs have attracted hundreds of millions of dollars in investment, signaling robust institutional demand. Analysts are revisiting a bold forecast from banking giant JPMorgan, which projected that XRP-based ETFs could see up to $8 billion in inflows within their first year. Spot XRP ETFs have hit the ground running. In just a few weeks after launch, cumulative inflows were approaching the $1 billion mark, a milestone reached faster than the early ETFs for Bitcoin or Ethereum. These XRP funds have locked up more than 400 million XRP tokens in the process, effectively removing a sizable chunk of supply from the open market. Major asset managers are involved. For example, Franklin Templeton's newly launched XRP ETF, ticker symbol XRPZ, saw about $5.7 million in net inflows on a single day, while Bitwise's XRP ETF drew $3.76 million that day. Other issuers like Canary and 21 Shares have also rolled out XRP exchange-traded products, even including a 2x leverage product, underscoring the breadth of institutional interest. Why are these inflows significant? JPMorgan's research report, titled Sizing Up the XRP Exchange-Traded Product Opportunity, estimates that XRP ETFs could attract between $4.3 billion and $8.4 billion in their first year of trading. The JPMorgan analysts based this projection on the adoption patterns of earlier crypto ETFs for Bitcoin and Ethereum. For context, early crypto ETFs saw substantial uptake. Bitcoin ETFs absorbed roughly 6% of Bitcoin's market cap, about $108 billion, in their first year. Ethereum ETFs gathered around 3% of Ethereum's market cap, about $12 billion, within 6 months of launch. Because XRP's total market capitalization is much smaller than Bitcoin or Ethereum's, even a similar percentage uptake translates to a lower absolute dollar figure. By applying those adoption ratios to XRP, JPMorgan's team estimated XRP-focused ETFs could pull in on the order of $4 to $8 billion of net new money over 6 to 12 months. They made a similar prediction for Solana ETFs at roughly $3 to $6 billion in inflows, with XRP expected to attract even more interest. In aggregate, JPMorgan suggested both XRP and Solana might jointly see up to $14 billion of ETF inflows in year one, despite anticipated lighter demand relative to Bitcoin and Ethereum's ETFs. Crucially, the early data is lending credence to JPMorgan's high-end forecasts. As noted, nearly $900 million to $1 billion poured into XRP funds within just 12 trading days. If that pace were to continue, though it may cool after initial launch hype, total inflows could approach the upper end of the forecast well before a full year elapses. JPMorgan's bullish outlook highlights growing confidence in XRP's investment case, thanks in part to Ripple's banking partnerships and improved regulatory clarity around XRP. In fact, market commentators have noted that XRP's established real-world utility in cross-border payments and its legal clarity after the 2023 Ripple court decisions position it as a prime candidate for institutional portfolios once regulated products are available. In short, Wall Street is finally paying attention to XRPP in a serious way. However, some skepticism remains. A few observers point out that despite Ripple's efforts, major global payment networks like SWIFT or Visa haven't yet adopted XRP at scale, urging caution on how inevitable large institutional uptake really is. But with multiple ETFs live and inflows accelerating, it's clear that at least some institutions are eager to gain exposure to XRP through familiar investment vehicles. JPMorgan's $8 billion inflow figure is impressive on its own, but the potential effect on XRP's price is even more eye-opening when you run the numbers. To investigate this, we examined a hypothetical model inspired by a Google Gemini AI analysis that incorporates a concept called the Bank of America multiplier. This idea stems from a Bank of America study suggesting that, for Bitcoin, relatively small net inflows can have an outsized impact on market capitalization due to limited available supply and liquidity. In fact, That analysis found roughly $93 million of new money could move Bitcoin's market cap by about 1%, implying about a 1 to 118 ratio of market cap increase to inflow. In other words, each dollar flowing into Bitcoin might boost its market cap by $118 under certain conditions of illiquidity. If we apply that 118 times liquidity multiplier to XRP's case, the results are startling. Taking the high-end projection of $8 billion in ETF inflows and multiplying by 118 suggests a potential $944 billion increase in XRP's market cap. Added to XRP's current market valuation, in the ballpark of $130 to $150 billion recently, this theoretical scenario yields a total market cap on the order of $1.07 trillion. Spread across the roughly 60 billion XRP in circulation, that would equate to a price of about $17.86 per XRP. In percentage terms, we're talking about an 8 times jump from current price levels, a staggering leap for an asset that's hovered in the low single digits for years. This finding is surprising. It implies that a relatively modest inflow, a few billion dollars is modest relative to global markets, could theoretically translate into nearly $1 trillion of value creation in XRP. The mechanism behind this is the limited supply on exchanges. As new ETF purchases gobble up XRP, the circulating supply available for trading dwindles, forcing buyers to bid up the price. The classic supply-demand squeeze. Essentially, new investment dollars can stretch much further in market cap terms when liquidity is thin. Before we get carried away, it's important to stress that this is a hypothetical, optimistic model. The $17.86 figure comes from an AI-driven calculation, assuming the same multiplier effect for XRP as observed for Bitcoin. In reality, different assets have different liquidity profiles. XRP's markets may or may not exhibit a 118 times multiplier. Additionally, $8 billion would likely flow in gradually and encounter sellers taking profits along the way, which could dampen the pure multiplier effect. There are no guarantees that hitting $8 billion of ETF inflows would produce anything close to $17 XRP. Real-world outcomes could vary widely. Nonetheless, this exercise highlights the potential magnitude of impact that fresh capital from ETFs could have. Even if the multiplier were half of the assumed value, XRP might still see a several-fold price increase in such a scenario. The surprise is just how sensitive the market cap could be to large inflows, underscoring the idea that liquidity, or lack thereof, plays a huge role in price dynamics. In summary, the math suggests that if XRP ETFs truly do pull in billions of new dollars, the ripple effect, no pun intended, on price could be dramatic. It's a vivid reminder that crypto markets can be moved disproportionately by influxes of capital, especially when much of an asset's supply is held off-market or in long-term holdings. While institutions gear up for exposure to XRP through ETFs, retail investors, the everyday holders of XRP, stand to potentially benefit from any price appreciation these inflows might drive. Many in the XRP community have held their tokens through years of legal uncertainty and stagnant prices, hoping for a big break. Now, with the ETF narrative unfolding, their patience could in theory be handsomely rewarded. To gauge the impact on typical investors, it helps to look at how much XRP people actually hold. According to the latest XRP rich list data, more than 596,000 wallet addresses hold between 1,000 and 5,000 XRP. At recent prices, around $2.20 per XRP, that equates to roughly $2,200 to $11,000 worth of XRP in each of those wallets. This range likely represents ordinary retail holders, not huge whales, but not tiny dust accounts either. In other words, hundreds of thousands of individual investors have portfolios in this ballpark, essentially making up the backbone of the XRP community. Now consider a hypothetical outcome where the bullish ETF scenario materializes and XRP's price indeed multiplies. Using the earlier price target as an example, if XRP were to reach around $17.86 in the future, the value of those everyday holdings would skyrocket. 1,000 XRP, currently about $2,200, would be worth approximately $17,860 at that price, a profit of roughly $15,660. 5,000 XRP, currently about $11,000, would be worth roughly $89,300 at that price, a profit of around $78,000 over current value. Such gains would be life-changing for many regular investors. A few $1,000s of XRP holdings could potentially turn into tens of thousands of dollars. This prospect explains a lot of the enthusiasm and diamond-handed mentality within the XRP retail community. After enduring a long period where XRP underperformed and stayed range-bound, these holders are now envisioning a scenario where years of accumulation finally pay off in a big way. Of course, as always, caution is warranted. Neither JPMorgan's inflow forecast nor the optimistic price projections can be taken as destiny. Markets are unpredictable. There's also the possibility that much of the ETF-driven price impact could occur before many retail holders decide to take profit, meaning some might miss the peak if they hold out too long. Nonetheless, the ETF development has fundamentally improved market sentiment. Even skeptics acknowledge that giving institutional investors a regulated pathway to buy XRP is a net positive for long-term value. For retail XRP investors, it finally feels like the wind is at their back, with Wall Street interest aligning, for once, with the hopes of the XRP community. This might shock you, but I'm not a financial advisor and nothing in this video is financial advice. Cryptocurrencies are highly volatile and you could lose all the money you invest. Always do your own research and consult a qualified professional. Your investments are entirely your responsibility, and you should know that nothing is ever guaranteed when it comes to investing. Neither I, this channel, nor YouTube are liable for any losses. This video is for entertainment and educational purposes only. If you're an XRP believer, whether institutional or retail, now is the time to make sure you're prepared for what could be a very exciting market ahead. Here are a couple of tips to position yourself. Use trusted crypto exchanges. It's wise to have accounts on reputable crypto exchanges so you can buy, sell, or trade XRP and other coins when opportunities arise. I've partnered with Kraken, one of the leading regulated exchanges, to offer a special promotion for my audience. For a limited time, if you sign up for Kraken through my link and trade at least $100 worth of any non-stablecoin crypto, you'll receive $25 in XRPP as a reward. This is a great way to accumulate a bit more XR while test driving a top-tier exchange ahead of a potential bull market. The offer details are as follows. Offer: invest $100, get $25 in XRP free. Criteria: trade $100 or more in any crypto except stablecoins on the Kraken platform. Time to complete: 30 days from sign up to meet the $100 trading volume. More details can also be found on our website, which is linked in the description. This kind of exchange sign-up bonus is a nice perk, even beyond the dollar value, because it encourages you to get your account set up and verified before the market gets hotter. In past crypto bull runs, exchanges often faced onboarding backlogs or temporary outages due to surging demand. Having an account ready on Kraken or other major exchanges means you'll be ready to act quickly when volatility picks up. Plus, Kraken's strong reputation for security and compliance can give you peace of mind while trading. Secure your XRP in a hardware wallet. While exchanges are useful for trading, they're not ideal for long-term storage of large holdings. Protect your XRP holdings by transferring them to a reliable hardware wallet where you control the private keys. A device like the Ledger hardware wallet is a popular choice for securely storing XRP offline. I have an affiliate link in the description if you need to purchase one. Using a hardware wallet greatly reduces the risk of hacks or losses compared to leaving your coins on an exchange. Think of it as vault-like cold storage for your crypto. If the bullish scenarios for XRP do play out, you want to be sure that your investment is safely in your hands when it appreciates in value. Always enable any available security features, including PIN codes, passphrases, and recovery seed backups, and keep your recovery phrase in a safe, offline place. And while we're on the topic of building a smarter crypto strategy, let me mention something I've quietly been testing in the background. Unity nodes. If you've watched my videos before, you've probably heard me talk about it a few times. Unity is a project founded by World Mobile and Minutes Network. It works through software licenses that allow you to run nodes from smartphones and in return earn crypto payouts. I bought a Unity node NFT, which came with 200 licenses. I'm starting small with just 10 phones for now to test it out, and if it goes well, I'll scale up from there. The cool thing is, I opted to be paid in a mix of Bitcoin, Ethereum, ADA, and XRP, a nice way to passively earn and stack more crypto over time. If that sounds like something worth exploring, there's a link in the description where you can read the light paper and check out their rewards calculator. Definitely do your own research before jumping in. So look, whether you're excited about XRP ETFs, eyeing long-term gains, or just getting your setup ready, now's the time to be proactive. Set yourself up on exchanges, secure your crypto, and test the tools that align with your strategy. All of my affiliate links, whether it's Kraken, Ledger, or others, are on my website linked in the description. These are affiliate links, so using them does support the channel and helps me keep bringing you this kind of research. And one last thing, I always say have plan A, plan B, and plan C. You never know when an exchange might go down, freeze withdrawals, or just be overloaded. That's why I make sure to sign up, KYC if needed, and test every platform I use. That way, I'm not scrambling when the market's on fire. If you found this useful, hit that subscribe button or check out one of the other videos on the channel, especially if you're looking for smart ways to position yourself for the next wave. And I'll catch you in the next one.